Here is a summary of Visa's fiscal second quarter 2026 earnings call, presented in a concise yet detailed manner for reading aloud. Visa fiscal second quarter 2026 earnings call summary. Good afternoon, everyone. Today, we'll be discussing Visa's strong performance in the second quarter of fiscal year 2026. We'll cover key financial highlights, management's outlook, and strategic priorities. Key financial metrics and performance. Visa delivered a robust quarter, demonstrating significant momentum. Net revenue reached $11.2 billion, an impressive 17% increase year-over-year. This marks Visa's strongest net revenue growth since 2022, and excluding post-pandemic recovery and the Visa Europe acquisition, it's the strongest since 2013. Earnings per share, EPS, grew by 20% year-over-year, also exceeding expectations. Payments volume increased by 9% year-over-year in constant dollars, reaching $3.7 trillion. Processed transactions grew by 9% year-over-year to 66 billion. Value-added services, VS, revenue, a standout performer, growing 27% year-over-year in constant dollars and now representing a significant 30% of net revenue. CEO's key statements. Ryan McInerney. CEO Ryan McInerney highlighted Visa's position as a leading global payments hyperscaler and outlined 4 key drivers for future growth. 1. Winning across payment categories. Visa is excelling in consumer payments, commercial payments, and money movement, with investments in innovation paying off significantly. 2. AI and agentic commerce expansion. These emerging technologies are expected to broaden Visa's addressable market and accelerate long-term growth. 3. Stablecoins and blockchain opportunities. Visa is establishing itself as a crucial interoperability layer, connecting this infrastructure with real-world solutions. 4. Value-added services growth. This segment, increasingly powered by AI, offers durable competitive advantages and is a key driver of future revenue. McInerney expressed strong conviction in Visa's ability to grow revenue well beyond the next 3 to 5 years, driven by these fundamental pillars. He also emphasized Visa's robust network, security, and trust as critical advantages in the evolving payments landscape, particularly in agentic commerce. CFO's key statements. CFO Chris Suh provided detailed financial insights, reinforcing the strong performance. He noted that the outperformance in net revenue was primarily driven by higher-than-expected volatility, stronger-than-expected value-added services, and lower-than-expected incentives. U.S. payments volume grew 8% year-over-year, showing resilience, with e-commerce outpacing face-to-face spending. International payments volume increased 10% year-over-year in constant dollars, with positive contributions from various regions. Cross-border volume, excluding intra-Europe, total cross-border volume was up 11%, with cross-border e-commerce leading the way. Commercial and money movement solutions, CMS revenue grew 24% year-over-year in constant dollars, exceeding expectations due to performance adjustments, deal timing, and pricing. Value-added services, VS, grew 27% year-over-year in constant dollars, driven by strong demand for network products and marketing services. Client incentives grew 14%, lower than expected, attributed to deal timing and performance adjustments. Capital allocation. Visa repurchased $7.9 billion in stock, the highest quarterly buyback in its history, and authorized a new $20 billion repurchase program. Future forecasts and guidance. Visa is raising its full-year guidance. Net revenue growth, now expected to be in the low double-digit to low teens range. Operating expense growth, expected to be in the low double-digit to low teens range, reflecting investments in marketing services, particularly for the upcoming FIFA World Cup. Adjusted EPS growth, projected to be in the low teens. For the third quarter, Q3, specifically, Net revenue growth, expected in the low double digits, anticipated to be the lowest growth quarter of the year due to higher incentive growth, lower volatility, and the second half weighted pricing. Operating expense growth, expected in the low teens. EPS growth, expected in the mid to high single digits. Significant risk factors, Middle East conflict. The company is closely monitoring the impact, particularly on cross-border travel spend in the CEMEA region, although they are seeing offsetting strength elsewhere. Payments nationalism. Visa continues to navigate evolving regulatory and political environments in various countries, emphasizing its localized approach. AI-driven fraud. The increasing sophistication of AI-driven fraud and bot activity presents an ongoing challenge, driving demand for enhanced fraud protection services. Highlights: record revenue growth, strongest net revenue growth in years, driven by broad-based strength. Value-added services momentum, significant growth and increasing importance of VS, now representing 30% of revenue. Agentic commerce and stablecoin strategy. Visa is positioning itself as a key player in these future-focused areas. Record share buyback demonstrates strong confidence in long-term value. Pismo and acquisitions. Acquisitions like Pismo are performing well, with significant partnerships like the one with Wells Fargo being a key example. Lowlights: Middle East conflict impact. While managed, the conflict introduced some near-term uncertainty to cross-border volumes. Volatility. While better than expected, volatility still presented a year-over-year drag on revenue. Incentives. Lower than expected incentive growth was noted, primarily due to deal timing. In summary, Visa delivered an exceptionally strong fiscal second quarter, driven by robust revenue growth, strong payment volumes, and significant momentum in value-added services. The company is strategically investing in future growth drivers like AI, agentic commerce, and stablecoins, while managing macroeconomic uncertainties and geopolitical events. With a raised full-year guidance and a clear vision for the future, Visa is well-positioned for continued success. Thank you.